Today we're talking about something pretty wild that just happened in Japan. We're going to dive into how the election of just one person sent a massive shockwave through global markets, unleashing what a lot of people are calling a financial tsunami.
But hey, before we get into all that, just a quick heads up. NYU grad from NotYourAdvisor.com is on a very well-deserved paternity leave until the end of October. To celebrate, they're actually offering a special discount on their annual plans for the whole month. You can grab that deal at NotYourAdvisor.com/October.
Okay, so picture this. On October 6, 2025, this number just lit up trading screens everywhere. In a single day, Japan's main stock index, the Nikkei 225, surged an incredible 4.75% to a brand new all-time high. I mean, this wasn't just a good day, folks. This was a historic, explosive rally.
So, naturally, the question on everyone's mind was, what on earth just happened? What could possibly cause a move that big? The answer isn't some new tech or a blockbuster earnings report. Nope, it was the election of one single person to be Japan's next prime minister. And that person is Sanae Takaichi, a leader who's already been nicknamed Japan's very own Iron Lady. So let's get to know her a little bit.
Right after winning the leadership race for her party, this was her immediate promise. And you got to listen to that repetition. Work, 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 work. That's not just a soundbite. That signals a relentless, almost obsessive drive and a huge ambition she's planning to bring to the job.
And let me tell you, she is definitely not your typical politician. We're talking about someone whose favorite musician is Deep Purple. Back in her university days, she was a heavy metal drummer and apparently used to break drumsticks during her gigs. Her favorite car is a vintage 1991 Toyota Supra, and her political role model is Margaret Thatcher. You get the picture. She's an original, and she is clearly not afraid to take the road less traveled.
So, okay, how does this unconventional leader plan to run one of the world's biggest economies? Well, her game plan already has a name, Abenomics. And if that sounds familiar, it should. It's a direct sequel to the famous Abenomics of former Prime Minister Shinzo Abe, whose legacy she has promised to carry on.
The plan is built on these three core pillars, what they call the three arrows. Arrow number one is aggressive monetary easing. She has been a loud critic of raising interest rates. Number two is massive fiscal stimulus. She wants to cut income taxes, consumption taxes, even gasoline taxes. And the third arrow is structural reform. Really, her whole mantra is to turn on all switches available to get the economy growing.
Now, a key piece of that third arrow is this pretty radical idea she's been floating, a cash deposit tax. This would go after the enormous piles of cash just sitting on corporate balance sheets, basically forcing companies to either reinvest that money or hand it back to shareholders. As you can probably guess, investors absolutely love the sound of that.
And all that excitement? Well, it led to an immediate, absolutely explosive reaction. The market didn't hesitate for a second. The moment her victory looked certain, traders just piled into what is now famously being called the Takaichi Trade. And the gains were just breathtaking. It wasn't only the overall market either. Specific sectors saw their own tsunamis. The defense and manufacturing giant Mitsubishi Heavy Industries skyrocketed over 11% in one day. The tech company Fujitsu was up 9%. This was a broad, powerful, and completely politically driven rally.
So what exactly is this Takaichi Trade? At its core, it's a bet on two big things. First, much higher corporate profits thanks to her stimulus plans, and second, a weaker Japanese yen, because she's pressuring the Bank of Japan to keep rates at rock bottom. And, right on cue, the yen promptly fell past the 150 mark against the US dollar. For Japan's massive export economy, this is like a huge tailwind, making their cars and electronics way cheaper for the rest of us to buy.
But here's the billion-dollar question. Is all this euphoria actually justified? To really understand the debate here, we're going to look at it from two very different perspectives. The long-term big-picture analyst versus the short-term in-the-moment trader.
So on one side, we've got the analyst, Michael Fritzell. He's focused on the long-term fundamentals. He's more cautious, asking a lot of questions, but he's also seeing some major potential shifts in big sectors like defense and nuclear power. Then on the other side, you've got the trader, Bill Carr. He is bullish, and he's all about following the short-term quantitative data. For him, the weak yen and the intense buying pressure are just clear, actionable signals to get in now.
Okay, so we've got two pretty different ways of looking at this. So how do we translate that into some actionable takeaways for you, the investor? What's the bottom line here? All right, from the analyst's point of view, the play here is strategic and patient. He argues that Takaichi's policies are going to fundamentally benefit three key sectors over the long haul. First, you've got the exporters. Think Toyota, Sony, who get a direct boost from that weaker yen. Second, the defense industry, because she's a known hawk who wants to seriously crank up spending. And third, nuclear power, a sector she strongly supports and wants to get reactors restarted much faster.
Now, the trader's view is much more immediate. It's about right now. Based on his data-driven analysis of market momentum, Bill Kara's system is giving out very clear signals. He has strong buys on tech firms like Fujitsu and Hoya Corp. Mitsubishi Heavy, even after that huge jump, is still a moderate buy. But what's really interesting is that he's got a clear sell signal on the financial giant Nomura Holdings, which just goes to show you not everything is getting lifted by this tide.
And that brings us to the final critical question. We have seen a massive, euphoric market reaction to a new leader with a very bold economic plan. But the real tension remains. Are we witnessing the beginning of a real, sustainable new chapter for the Japanese economy? Or is this just a fleeting stimulus-fueled sugar rush that's eventually going to fade? The answer to that is going to define the next chapter for Japan's entire market.